Hey, welcome to the Diary of an Apartment Investor podcast. This is your host, Brian Briscoe. And this is a very dated episode. I mean, it's December 13th as I talk about this, and it'll be released December 14th. But just, state of the economy, I think it's important to talk about. And I wish I knew what the future would look like. I wish I had a crystal ball like a lot of people, but there's a lot of things that impact apartment investing. And, the number one thing is interest rates. The Federal Reserve Committee, whatever the official name for them, they're meeting today and tomorrow, and it's expected that they're going to raise interest rates again. So, you have the baseline interest rate. It looks like they've signaled that they're going to raise it about 50 basis points or 0.5%, which essentially means most interest rates in the country are going to go up by about 0.5%. So when you look at what the loans are all based off, most of the loans are based off of indexes. If it's the SOFR, the standardized overnight funding rate, SOFR is very much going to be impacted by the federal funds rate. So if federal funds rate goes up by 0.5%, SOFR is going to go up by 0.5%. And it's going to fluctuate, between by roughly a quarter point, day in, day out, but it's going to increase rates. Now, what's that also going to do? Well, the idea is that's going to make borrowing more difficult, more costly, which means the economy is not going to expand as fast. Companies are not going to go into debt to fund improvements or to expand or to do more. And people like you and me who are looking to buy apartments are not going to do as much. We're not going to be able to purchase apartments with these high interest rates as easily as we would a year ago. We're not going to be able to do the value adds and pump more money into the economy. So the idea of the Fed raising the rates is just to do exactly that, cool down the economy so that inflation is in check. We had our monthly inflation data came out yesterday, which is probably why the Fed is meeting today and tomorrow. But, the inflation has gone down since its high in June, I think is when it was. But it's still, 6.5%, 7% is what we're looking at. So 7.1 year over year. And then this core inflation is 6% on the dot is what it's looking at. So that's where we're at. How's it going to affect us long term? The longer interest rates stay high, the more of an impact it's going to have on pricing of multifamily properties. With rates have starting to go up earlier this year, we have seen an impact on prices. I mean, obviously, the higher the rates are, the less people can pay for properties and still make money, which means eventually it's going to affect pricing. And I think in a lot of areas, it has already affected pricing. Prices have softened, prices have gone down, cap rates have gone up. And the longer the federal rate stays high, the more of an impact that's going to have. And for example, if rates stay high for a year or 2 years or 3 years, I think the entire market's going to readjust its pricing. Now, do I think it's going to stay up that high for that long? Probably not, is my answer. There's a lot of competing interest here. I mean, obviously the Fed wants to get the inflation in check. And oh, by the way, 9% inflation on a global yardstick is not a lot of inflation, but for US standards, it's significant. But the Fed wants to get that inflation in check. They want to have us, around that 2 to 3% mark per year. But if they have to keep rates up high for several years to do it, it will impact the pricing, because I think a lot of people are still buying right now with the expectation that rates are going to go down. And the Fed is eventually going to pivot, bring rates back down to ease back in and try to get that soft landing. Now, the impacts of keeping the rates up high is the effect on the economy. They're intentionally slowing the economy down to bring the inflation down. But by slowing down the economy, that's also going to affect jobs and employment. There's already been lots of announcements on layoffs and whatnot. And the longer the rates stay high, the more protracted that's going to get, the more severe that's going to get. And a lot of people have asked the question, are we in a recession? And there's been no official determination that I'm aware of yet. But the longer the rates are up high, the more likely the country is to go into a recession, the more likely it is that the employment suffers, which is going to basically mean that eventually the Fed is going to have to bring those rates back down. Because how do you fight unemployment? You basically make the environment such that the businesses can do more and hire more, which means you have to bring rates down. So anyway, I expect rates to come back down. I don't think they're going to be as low as they were a year ago, but I expect rates to start coming back down, sometime soon-ish. I have no idea when. But now the other thing, there's obviously a lot of different, as I mentioned earlier, competing interests, and then I went off on a tangent, but there are some competing interests because the interest rates, the federal interest rate also affects the country's debt service. It doesn't just affect us as multifamily operators. It doesn't just affect our debt service. It affects the country's debt service. So the longer interest rates remain high, the more the U.S. has to pay to service its own debt. And it's a very complicated thing. There's not an immediate reaction. There's a lot of different treasuries that have been set. But when the treasury bills reset, so if somebody bought a 2-year treasury 2 years ago and the interest rate's going to remain the same during the life of the treasury, but when those treasury bills, when that debt resets, it's going to reset at a higher rate. So it's not going to be an immediate effect. If the feds raise the funding rate by 0.5%, like they probably will, the debt service for the country doesn't immediately go up. But the danger is the longer that the rates stay high, the more the country is going to have to put into debt service, which is going to further ice the economy. So there's lots of reasons why the Fed should bring rates back down once inflation's at a decent number. But the question is always, how long? And I think when rates start coming back down, prices on real estate are going to continue to tick back upwards. How fast? I don't know, but I think they will eventually tick back upwards. And I think the reason we haven't seen such a drastic decline in prices is, like I said before, everyone's expecting the rates to come back up. So a year ago, we were getting rates in the 3s. Right now, we're getting rates in the 7s. We haven't seen cap rates move nearly that far, but they have moved slightly. But once again, I think it's because everyone's expecting the rates to come back down. And if they do, game on, everybody's happy, everybody's a winner. If they don't, like I said, I think the prices are going to take some time to adjust, but they eventually will. And that just means coming down. So what does that mean for real estate investors? It depends on how optimistic you are. I think there's enough indicators out there saying that rates will come back down that I am still optimistic about buying, number one. But number two, if you look at any period of U.S. history over 10 years, real estate prices continue to go up and up and up. So if you have a long enough horizon, if you have a long enough time frame on your investment, I think you're still going to make money. You're still going to do well. Anyway, that's it for today. We'll see by the time this releases and you're listening to this, the news about the Fed rate has probably already been published. So we'll see what happens. And hopefully, like I said, a year from now, rates are lower than they are at, and we can continue to buy and do well in this business.
Hey, if you like that episode, make sure to subscribe. But more importantly, if you haven't joined our multifamily educational community yet, which we call the Tribe of Titans, you are missing out. Get 30 days free by clicking the link in the description to this episode, or go to thetribeoftitans.info, and we'll see you there.